There is all sorts of crazy stuff going on geopolitically around the world. Gold and silver have been in the dumps since 2011. The vast majority of people are still not excited about gold and silver, even though they really should be.
Please join us for our next live stream Sunday, December 1st at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, December 1st, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Once again, if you are new to this channel or you have not already done so, please do subscribe. Click on the bell to be notified on new updates, and do give us a thumbs up. If you like what we do, we appreciate your support. Today's guest is Nick Giambruno, who is the Chief Analyst of KC Research's flagship advisory, the KC Report, and its premium value investing advisory, Crisis Investing. He travels around the world in search of lucrative investment opportunities in overlooked markets, helping others to earn outsized investment gains. Nick's approach to investing also focuses on profiting from distortions in the market. This includes identifying unfounded pessimism in beaten-up industries, which creates opportunities for enormous financial upside. And we're delighted to have him here today as our guest. Good day, Nick, and welcome to SBTV. How are you doing?
I'm doing great. Great to be with you, Patrick.
Great. Glad you can be here, Nick. Appreciate the time you've given us. Nick, you're described as Doug Casey's globe-trotting colleague on the KC Research website. Can you share with us a little about your background and how you became Doug Casey's colleague?
Yes, I'd be happy to. I have been reading Doug's work for many years prior to when I started working with him. And when I met Doug, I actually met Doug in Lebanon, in Beirut, Lebanon. And Doug likes to go around to these kind of crazy places, and so do I. At the time, I was working for an investment bank in Beirut, covering regional stocks and securities. And having been a fan of Doug and reading his work, because I think he has excellent insight on the commodities market, philosophical ideas and so forth, he just put out in one of his emails that hey, I'm going to be coming to Beirut, Lebanon, which is kind of an obscure location, and if anybody wants to get together for a coffee, to shoot him an email. So I shot him an email, and we met for coffee, and one thing led to another, and I started working for him. So that's the story in a nutshell.
Can you give us examples of what you mean by distortions in the market and that have created profitable opportunities for you in the past?
Sure. Well, I run the crisis investing advisory at KC Research, and as the name implies, I look at markets and that are in crisis, not necessarily countries. It can be commodities. It could be anything that's in crisis, because a crisis often gives you an opportunity to buy something on the super cheap. Now, you have to look at something that's not just a crisis, because some things are going to be a crisis and not going to recover. So you want to look at things that have that are beaten up unjustly. One of the things that we did, we've looked at lots of markets, but one of our success stories is, if you remember, about back in 2013, when Cyprus had a banking crisis, and they actually were the first country to institute the now notorious Bullion scheme. That destroyed the country's the stock market, the confidence in the country. So we decided, when there's a crisis like this where it's plastered across global headlines and everybody doesn't want to touch it with a 10-foot pole, that's the time when you want to take a closer look at these situations and see if there's anything worth looking at. So we looked at Cyprus and found that Cyprus had been through much worse things than a simple banking and financial crisis. They've survived invasions from Turkey and all sorts of stuff like this, basically a civil war, and Cyprus was going to survive. So what we found there were sound, productive, well-run businesses that were producing earnings and paying dividends that were totally beaten up unnecessarily from this crisis, and we looked to buy, and we did very well. I think we closed out a couple of positions that doubled, and I think one tripled. So these are just the kind of opportunities, and you can see this in other markets too. Uranium is a classic example of this. It's another hated market because of things like Fukushima, Chernobyl and 3 Mile Island. But really, there is no substitute for uranium, and it's going to be here with us for the foreseeable future. So these kinds of opportunities actually give you the chance to make really outsized gains and asymmetric gains when you look to invest when other people don't. It's like what the original Rothschild said about buying when blood is in the streets, and that's kind of what we do here with crisis investing.
Okay. Nick, would you consider gold and silver to be one of these opportunities that have distorted fundamentals and beaten up industries?
Oh, certainly. Commodities in general, but gold and silver in particular, up until very recently, have been beaten up and hated. I mean, yeah, they're up a little bit this summer and this year, but taking the longer term view, gold and silver have been in the dumps since 2011. So really, outside of a small circle of people, the markets aren't even though they are up this year, the vast majority of people are still not excited about gold and silver, even though they really should be. So yes, I do consider that to be a market that is completely distorted, only because I look at the precious metals, but gold in particular, as money, as a substitute for these fiat pieces of paper and digits on a computer that governments can just create at will. So that's gold is in the market for money, and the market for money is completely distorted by central banks and governments, so that therefore is creating a wonderful opportunity. And silver too. Silver is a monetary metal, but it's more of an industrial metal than say gold is. So yes, because of the distortions that are pumped into the marketplace from central banks and governments, there is an enormous opportunity for gold and silver right now, I believe.
Okay. And Nick, you wrote an article on Casey Research back in August titled "Silver Will Benefit from America's Debt Crisis." I'll put a link to the video in the video description for our viewers. You started the article talking about the actions of the Hunt brothers back in the 70s. And for the benefit of our viewers who are not familiar with the Hunt brothers, can you share with us what happened with the Hunt brothers and their silver trade?
Sure. Well, the Hunt brothers are vilified even to this day by the media and lots of other people because, well, what they did is first you have to understand the silver market is tiny. It's about 1/10 the size of the gold market. It is a tiny market within not a very big market, which is commodities and precious metals. So it's a small sliver of that already niche market. And what happened was that back in the 70s and the 80s, the Hunt brothers were concerned about inflation. And it's a legitimate concern. The government back then, as it is now, is printing loads of money, financing ballooning deficits by printing money. There is all sorts of crazy stuff going on geopolitically around the world. Back then in the 70s, you had wars in the Middle East. You had the Iranian Revolution that kicked out the U.S.-backed Shah. And, of course, Iran is a big oil producer. You have the same kind of setup today. But anyways, what happened is the Hunt brothers looked around and they saw this macro environment and thought, wow, we should buy some precious metal. And then when they decided, actually they started buying precious metals, I believe, back in the early 70s. So this was a process that went on for a number of years. But back in the early 70s, you have to remember, it was illegal for people to invest in gold back at that time. So U.S. government prohibited it. It's completely absurd and totalitarian if when you think about it. So the Hunt brothers saw this environment, this macro environment that where they were worried about inflation, they were worried about currency debasement, they were worried about what's going on geopolitically, and they were prohibited from buying gold because the government prohibited it at the time. So they did the next best thing, and they bought silver. And they started to accumulate silver, a lot of silver. And because the silver market is tiny, and the U.S. government did not prohibit buying silver in the same way it prohibited buying gold. So they started to buy silver and accumulate in a big position. A few years later, the U.S. government did legalize gold ownership again, but by then the Hunt brothers had built up a considerable position in silver, and this continued throughout the 70s and the early 80s. And they took physical delivery, unlike most people in the market, trading these paper contracts and these derivatives of silver. They took physical delivery of silver, and I believe they shipped a lot of it out to Switzerland, actually. So the Hunt brothers, that's all they did. People portray them, the media portrays them, historians portray them as like these criminals that were manipulating the markets and ripping people off. It's totally not the case. They were speculators. They saw a situation where the government was debasing the currency, and they took action to profit from that. So they're not the villains in this story. The villains in this story is the government who is destroying the currency. It's not the person who sees what's going on and takes advantage of it. So nonetheless, because of what they did, they bought a lot of silver, and that caused a spike in silver prices. Not just them. There was a panic into silver because of inflation. There was a panic into precious metals in general, but because the silver market is so tiny, when there was all this inflation going on in the late 70s and early 80s, people panicked into precious metals, and a lot of that money found its way into silver, and that caused the price of silver to spike. So that's what I'm talking about with the Hunt brothers and the situation. So why it's relevant today is because I see a similar setup to the setup that happened back in the late 70s and early 80s. I see a similar setup happening right now in silver. So that's why I told that story. First of all, to set the record straight, because the Hunt brothers, everybody thinks of them as villains, but really it's the U.S. government people should think of as villains. So I told that story to, one, kind of set the record straight, and two, illustrate that there is a similar setup happening right now.
Yeah, no, I personally think what the Hunt brothers did was pretty epic. I mean, that what they did was completely epic. But do you think the likelihood for the government to step in would have been lower if the Hunts did not actually take physical delivery of that silver?
Well, yeah. Well, the thing is that there's nothing wrong with taking physical delivery. I mean, that is what they're doing. They're buying something and they're taking delivery of it. Yeah. This is kind of a wrong. People think of this in the wrong way. I mean, what about any other thing, any other item that people purchase? Then they don't. You don't take physical. Are you really transacting in it if you're playing around with paper contracts? Imagine if you bought your shoes and you didn't take physical delivery of your shoes. It's like it's kind of ridiculous that the government would get so upset that, oh my God, they took physical delivery of their contract of something that they bought. So really what this illustrates is that there's a Ponzi scheme. There is more claims floating around than there is actual physical metal. So that's why, because they don't want people, because that's the thing, is that the gold and silver aren't just any commodities. They're kind of a barometer for government currencies. That's why the governments are so uppity when the price of gold and silver gets out of whack. I don't think they would have had the same level of concern if they were the Hunt brothers were trading cotton or iron or anything else. So that's what it is there. So. Again, it just illustrates the situation, the true nature of the situation, which is that these guys did nothing wrong. They didn't coerce anybody. They didn't steal from anybody. They just traded their pieces of fiat money for silver and insisted to actually take delivery of the real silver. Nothing wrong. There's absolutely nothing wrong with that, in my opinion.
Yeah, I hear you. Completely agree. I think you were just talking about shoes, and for all us married guys, we know that if our wife went out and bought shoes, she is not going to settle for that paper contract. She is taking
No.
delivery and bringing that thing home. But anyway, after the hunts, we had Warren Buffett. He went in and he bought quite a bit of silver as well. But do you think a repeat of what the Hunt brothers did will happen in our day and age again? Meaning, that is the action of a few traders will overwhelmingly move the price of silver in their favor.
Oh, yes, I think it's inevitable because because we're set up for a situation where the government is creating lots and lots of inflation, and people are going to look to profit from that. And anybody who sees this situation, I'm very sure that there will be some smart speculators out there that will see this setup and look to do the same thing and look to protect themselves and profit with precious metals. And when they do that, because the precious metals market, I mean, the gold market is relatively tiny to compared to other financial asset classes, but the silver market is just a sliver of the gold market. So when they look to protect themselves from what's going on today, which is even, in my opinion, it's even worse than what went on in the 70s and the 80s. You have trillion-dollar deficits in the U.S. that are only going to get bigger. How are they financing it? Financing it with money printing. The Fed has basically reinstituted their money printing program, euphemistically called quantitative easing, but they're not. They're trying to like dance around what it really is. You have negative interest rates all over the world. I mean, the setup is even better today than it was back in the 70s and the 80s for gold and silver. So yes, I absolutely see this kind of a situation happening again. It wasn't unique to the Hunt brothers. It was a situation. They saw what was going on and they took advantage of it. I'm very confident that the same kind of thing could easily happen again today.
Okay, is this part of what you refer to as that predictable pattern in your article?
Yes, this is a predictable pattern because when the governments do these things, people do these things. I mean, destroy the currency, debase the currency. Typically, that leads to movement into something they can't debase, and that's historically been gold and silver. So, yes, this is a predictable pattern.
Okay, so I think it's fair to say that it's a great time to get in on silver, and but despite its uptick this year, is silver still cheap despite this little rally it had this year?
Yes, I think it is still cheap because this rally, yeah, there was a rally in silver this year, but really we haven't seen people panic into it. When we start seeing people panic into silver, because like what happened back in the 70s and the 80s, people they were panicking into silver. They were going through their grandmother's drawers to take the silverware out and melt the silver so they could sell the silver and get. So when we start seeing stuff like this, then we can talk about whether silver is. Now this is more of it's not a quantitative measure. It's kind of measuring psychology. And the way I see it right now, compare that in psychological environment where people are like going through their grandmother's silverware to try to melt it down and get some money by selling the silver because they're so excited to realize the appreciation to today where most people couldn't care less about silver. So I think the situation is very favorable for people who want to get in.
Do you agree that inflation masks the appreciation in the price of silver over the past decades? Let's say the near $50 silver price back in 2011 is not the same as the near $50 silver price back in 1980.
Oh, absolutely. That's because you're measuring something with a yardstick that changes. Because the dollar in 2011 is nowhere near worth as much as the dollar in the early 1980s. It's worth a lot less. So in real terms, in real purchasing power terms, $50 silver in 2011 is not the same as $50 silver in the 1980s. You're not measuring something with the same yardstick, which is the dollar, because the dollar changes. So you have to look at it in real terms, and then that's kind of tricky because like how do you measure something in real terms Well, people often use the government's inflation CPI numbers, but those are bogus too. I think, needless to say, that silver did not reach its real its all-time high in real terms in 2011. It did in nominal terms, certainly, but nominal changes.
Silver mining stocks, how are they doing at the moment? There aren't many out there compared to gold mining stocks, right?
That's correct. There's around a dozen or so that are pure play or somewhat pure play silver. Maybe a couple more or less, but no. Looking at companies that have a not I don't even want to say pure play because there's not many pure play silver companies that have a significant amount of their revenue derived from silver. This is a tiny universe of stock. It's even tinier than gold mining stocks or other mining stocks. So silver, to get that exposure, you don't have a lot of options. You really don't. And yes, there's still, it's the same as the price of the commodity. Some of them have gone up, had a bump this year, but largely from the ones I've been watching, they've largely given it back now, and as we're speaking here in late November of 2019. So yes, I'm personally buying more silver and more silver companies because I think the risk reward is really skewed in your favor at this point.
Yeah. You mentioned options. Within those options, for investors who are interested to buy silver mining stocks, are primary miners a better choice than secondary miners?
Yeah, I would say. I mean, it depends on some other factors. I mean, if you're looking to get specifically the leveraged exposure to silver that those silver mining companies give, yeah, I mean, it depends too. It depends where their properties are. You don't want to have a company that has, you want to look at if they're in mining-friendly jurisdictions. There's a lot of factors at play here. But yeah, if you want to look at a company that gives you as pure of a leveraged upside to silver as you can. But there are other factors with the caveat. There are a lot of other factors you want to look at too.
Okay, we touched on the crazy things that governments and central banks do. Therefore, how would mining stocks perform in a debt crisis that we've discussed earlier?
Well, the way I see it, there is going to be, yes, I believe there is going to be a debt crisis, but there's going to be different phases to the debt crisis. Initially, when people default, because all of this fiat currency is in effect based on debt, that's destroying fiat currency when people default. So that is going to be deflationary, and it's going to probably bring the price of everything down, including commodities, gold and silver stocks in general. But what's different than, say, the 1930s is that the governments aren't on a gold standard. They can print as much money as they want, and they will. So when the debt crisis happens and this debt bubble blows up, what are the governments going to do? Are they going to do nothing? Like they couldn't do anything back in the 30s because they were tied to a gold standard. They couldn't inflate the money supply at will, so that constrained them. There is no such constraint today. So I think it's inconceivable that if and when we have a debt crisis, that the governments won't just put the pedal to the metal, and they already are putting the pedal to the metal on the currency creation. I think it will go hyperbolic when this happens, and I can't see that they in this situation that they'll just do nothing. They're very clearly going to put the pedal to the metal on the money printing and all this so-called easing. I mean, you even have President Trump publicly calling for negative interest rates. Do you think if there's a debt crisis that Trump and the Fed are going to do nothing? I think that's not going to happen. So I think at the initial stages, it's very possible everything could go down. But I think very shortly thereafter, they're going to open the floodgates, and it'll have to be orders of magnitude bigger than their previous QE1, QE2, QE3 programs for it to have an effect. Because it is like a drug, and the economy has been used to this level of easy money. So they're going to need higher and higher doses to get the same kind of effect. And I think there's no question they'll do that. So when in other words, in a fiat money system, when the debt becomes a problem and debt blows up, governments are always going to hit the easy button, and then the easy button is money printing. What they should do nothing. They should do nothing. They shouldn't, inflate the currency and destroy the currency. But that's the easy button for them, and I think they will do that.
Okay. Nick, have you researched into how this crisis will impact the U.S. and its knock-on effects on prices of different assets?
Well, I think we just talked about a little of what will happen, and nobody really knows how this will turn out. But with debt, I mean, debt is at all-time record highs, and it's just every kind of debt, government debt, personal debt, credit card debt, student loan debt, all of these different kinds of debt, state governments, local, municipal government debt. This is just in the U.S. Negative interest rates are, the amount of debt that has a negative interest rate is exploding. I think it's like 17 trillion right now, up from 12 trillion just a few months ago. So debt is exploding around the world. How that's going to affect different asset classes, nobody knows. Nobody knows. But I think when the defaults start to happen, then I think prices will go down. But I think that will be short-lived. That could be short-lived because the governments are just going to come back and just print even more money and try to paper it over and hit the easy button, like I said. And at that point, I really think the commodities, and in particular the monetary metals, are going to soar, because at that point, what are the governments doing? They're destroying their currencies to try to paper over a debt crisis. And these alternative monetary units, gold, silver, to a lesser degree, platinum and palladium, these are really going to shine at that moment. And I think we're not far away from that from happening. But even if the debt crisis doesn't really blow up into a bunch of defaults like we're talking about, in order to prevent even that from happening, this is why they're going, pedal to the metal on the negative interest rates, bringing back QE. The Fed tried to tighten, and it was a humiliating reversal earlier this year. So they're already trying to forestall and stop this debt crisis, which even they, I think, can see is coming. And even in that, they're destroying they're just kind of going straight to they're not waiting for the debt crisis to happen. They're just going straight to the inflating and debasing the currency. So I think, in this environment, holding physical metals, gold and silver, is necessary for prudence and capital preservation, and mining stocks, gold and silver mining stocks, are necessary for capital appreciation and speculative opportunities. So that's how I see it.
Okay. Yeah, I was just going to ask you, Nick, how have you aligned your investments given your outlook for a crisis of such a magnitude? So you're looking at mining stocks, physical gold, silver, things like that. Any other things?
Yes, exactly those things. I'm involved in and invested in both of those types of asset classes. Gold and silver bullion, gold and silver mining stocks. Definitely very interested and very involved in those assets. I'm also maintaining some cash as well, because just in case, not a ton of cash, but a meaningful amount of cash, because right now it's uncertain. These central banks around the world are clearly trying to forestall this debt crisis from happening. I don't know if they're going to be able to. They might or they might not. I think they won't be. I think they'll try, but I don't think they're going to be able to. It's just this debt bubble is just, it's the biggest bubble almost in the history of mankind, I think. So I don't know if they can stop that. So I want to have some dry powder to pick up some bargains in the case this thing really blows up. But at the same time, I don't want to be all in cash, just in case they can forestall this thing by debasing the currency. So I want to have a meaningful, significant exposure to gold and silver as well in that situation. So I want to be prepared for both outcomes. But the bottom line is, it's whether they destroy the currency now or they destroy the currency later. They're going to destroy the currency. It's just a matter of when, not if.
Completely agree. Nick, before we wrap up, can you tell us more about your work and the Casey Report?
Yes. So we talked about crisis investing earlier. The Casey report is focused more on the big picture macro outlook and investments as it pertains to the worldview of Casey Research, myself and Doug Casey. So that's more of a macro based service, big picture based service. And yeah, we also have crisis investing, which is, as we described earlier, kind of a deep value, looking at crisis markets for value. And yeah, people can find more of my work and my writings at caseyresearch.com. They can also find me at nickgiambruno.com and at Twitter at Nick Giambruno.
Okay, Nick Giambruno, we appreciate you coming on the show and giving us some time, and we do look forward to seeing more of your work.
Sounds great. Thank you, Patrick.
That was Nick Giambruno from Casey Research sharing with us about his outlook for silver. To learn more, please visit caseyresearch.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and do also check out the SBTV podcast on iTunes and Spotify.